Hi, this is Kathy Campbell with Coldwell Banker. Today we're here with Miles Pitcher with Superior Lending.
Hello.
Hi, and we are just having this month student loans.
Yeah.
Since COVID hit, nobody's had to make a student loan payment, right?
Totally.
But October they are now due, and it's having an effect
Yeah.
on whether you can qualify for a mortgage. So we've asked Miles to kind of share the ins and outs of student loans and repayment and how it affects them. Maybe what to watch out for to help you maybe cope with the repayments or calm
Absolutely.
it down a little bit. Okay.
Yeah, and you may not have student loans, and you may think this doesn't apply, but you need to be aware of it because someone you know probably does. And so there's 1.7 trillion in student loans outstanding as of the end of 2022.
Wow.
It is the second largest debt in the country next to mortgages, so it even surpasses credit card debt. Utah has the lowest average student debt coming out of college of $18,000, which is good.
Okay, that's interesting.
Which is good.
Okay.
But so, yeah, you're totally right, Kathy. Student loans have been paused by the government. You couldn't even make a payment if you wanted to. After they extended that pause 8 times, now it's finally time.
Okay.
Notices went out September 1st. Payments are due by October 1st, and then it will hit credit in November. And just
So if a payment is not made this month, it will go and ding their credit score.
it'll ding their credit
Okay.
in November.
Okay.
And just so you know, if your student loans go into default, you go on, they keep kind of a blacklist. They call it CAIVRS, CAIVRS. And we have to check that to see if somebody's been in default on their student loans.
So in qualifying for a mortgage, that's a real black mark
It-
as far as they're in CAIVRS.
Yep, exactly.
Okay.
So please be aware of that. But if the student loan is a difficulty for you, please be aware that there is an income-based repayment program that you can apply for. You would do it through your servicer of your federal student loans, and based on your disposable income, it's a year-to-year thing that you apply for, but you can have those payments reduced or paused for that year.
Okay.
The great news is at this point in time, if anybody has student loans and we're trying to help them get into a home, qualify for a mortgage, we have to count a payment even if you're making no payments at all, unless you're in that income-based repayment program.
Okay.
Then in that case, we can exclude that student loan payment.
Doesn't count on their debt to
It
income
doesn't
ratio.
count from the
Okay.
debt ratios. Yeah.
So a good option for me, people who are feeling a little bit stretched here.
Absolutely.
Right.
I'll also mention that there are a lot of private student loan companies out there who will be marketing to you and pushing you to consolidate your student loans. Please be careful doing that. Once you do that, you lose the ability to have that income-based repayment plan. That's only on your federal student loans. So let me share an example. A friend of mine's a loan officer in the East Coast, and they ran into a client who had somewhere around $300,000 of student loans.
That's a lot of school.
Huge
Yeah.
amount. And she had been doing the income-based repayment for 17 years. And there's a rule with the income-based repayment that once you're on it for 20 years, then your federal loans are forgiven.
Okay.
She had been doing it for 17 years and then decided to consolidate all of her student loans into a private company. She now has lost that ability to have income-based repayment forgiveness and to have all of her student loans forgiven. So just be careful
Okay.
with the private student
Great
loan
example.
companies. Yeah. So since 2020,
Yeah.
our student loan balance has increased $165 billion. That's with a B. The average student debt in the nation is $39,000, and then it takes on average 4 to 12 years. I don't know how they figured that for repayment.
Right, they're not- But Utah, you said, is the lowest, and it is,
18,000.
so 18 compared to the national average.
National
38.
average.
Okay.
Yeah. Of those industries that are most likely to default on their student loans or go into default, attorneys, lawyers are the number one that go into default. Yeah.
That's interesting. Would you say it's because they have the highest amount of debt?
I think they have the highest amount of
Okay.
debt, or it's near the top. I'll mention also we have a website called unpausedstudentloans.com. And this is a service that we've signed up for that allows somebody to hop in, put in their statistics, how much they make, how much their student loans are, and their other debts, and it will do a quick calculation for you and tell you if doing the income-based repayment is a smart thing or not.
That's an awesome service, thank you. So unpaused,
Studentloans.com.
okay,
Yeah, it has my contact info in there, but it's just a calculator that
okay.
helps you make a quick calculation without getting spammed by some telemarketer or something if you talk to someone else. So that's there for any of you to use.
Awesome service. Well, thank you, Miles. It's really helpful information. So in summary, student loans are due this month.
Yeah.
Don't miss a payment or it'll ding your credit. There's a possibility if the income is tight that they could possibly have lower payments or even zero payments based upon how
Correct.
much income they have, right?
Absolutely.
Really help you. And these student loans are, for a while, they weren't counted towards qualifying for a
Yeah.
home loan, but they are now, unless you're in that, what is the term again?
Income-based repayment.
And if you're in that, then it doesn't count towards your income
Correct.
as you qualify for a mortgage. So
Yeah.
great information. Thank you.